Seek consistency and reliability, not complexity and quantity. It's very important that you find indicators that work. Now, all indicators have value, but you don't want to have too many of them. Most of them can assist you in finding trends, but honestly, two indicators that complement each other are enough. You don't have to have more than that. Now, when we look at indicators, we follow two of them. We follow the price percent oscillator, which is a blue line on the bottom half of our chart, and the derivative oscillator, which are light green and red boxes depending on which way they are oscillating, and they complement each other. We see that the price percent oscillator is a lagging indicator, and again, it's a percentage version of the MACD, the moving average convergence divergence indicator, which is a simple mathematical formula, a graphical representation of that, and it helps us follow developing trends and ending trends. The derivative oscillator is different in that it is a triple smooth version of the relative strength index that helps us see overbought and oversold conditions. They complement each other. They go together. Now, we keep our charts very simple and straightforward. What we want to do is to determine entry and exit points. That's really all we're doing. All we're trying to do is figure out when to get into a trade, to practice following the trend, and when to get out and have successful practice trade after successful practice trade. We keep it as simple as we possibly can. You need to practice over and over and over again whatever indicators you use, and again, no more than two, that complement each other, but practice them over and over again to establish their accuracy, to make sure that they work. They should help warn you when a trend is ending, and they should help find you a trend to follow. And there is no need to use them all. Consistency and reliability are the goal. We want to find indicators that work time and time again. Now, of course, on our charts, we have found over years of using the price percent oscillator and the derivative oscillator that they help us see vertical crossovers, whether on the weekly or the 2-day or the 4-hour chart. And those vertical crossovers help us see changes in trends, which is what we then follow. We're not trying to forecast what's going to happen. We want to see an established trend that we can jump in and ride. That's what we do. We keep it as simple as possible. The most complicated skill is to be simple. I'm going to repeat that. The most complicated skill is to be simple. I guess I would add to that, and effective. That's what we want to have. We love to hear from you at chartingwealth.com. Please be sure to go to our website, sign up for our daily review. Comes out 4 days a week. You get an email. That list is never spammed, and you also get all of the training included in the show notes with every email that goes out. Trainings like the one you're listening to right now. You get our daily review where we review 4 ETFs, the S&P 500, the NASDAQ 100, 20-year bonds, and gold. So you get a nice broad swath of different markets. And we follow those on a daily basis. Once a week, you get our comprehensive review. So we want you to have all of those things. Thank you so much. We love to hear from you. cw@chartingwealth.com is our email address. You have questions, problems, concerns. God bless. All the best from the whole team at Charting Wealth World Headquarters.